All right, everything should be looking good. I believe we are live. Let me know if you can hear me in the chat, coming through loud and clear. But we'll go ahead and get this stream rolling. All right, welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:05 Eastern Standard Time on December 15th, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so obviously the well-awaited moment has arrived, came and gone. And if you don't know what I'm talking about, obviously the Fed meeting and announcement. So we'll get into all that. We're going to do some technical analysis, take a look at our typical trend charts, DXY, TNX, and then obviously we will take a look at the major markets, the indexes, maybe dive into some of the individual stocks, but definitely going to take a look at crypto and I think commodities today as well. So quite a bit of what we had discussed has basically been playing out perfectly. We saw, as we were talking about, basically a quick little safety move into, utilities, real estate, basically, scared that all of a sudden the rates were going to jump up and we're going to see big changes in the market, big shift, etc. But obviously the moment came and passed, and Powell did exactly what we said, 100%. Again, perfectly right, exactly as discussed. Hey, thank you, David. Appreciate that. No surprises here. So everything that was priced into the market came to fruition perfectly. If you didn't catch the meeting today, the questions, etc., highly recommend that you check it out. It's basically about an hour long, and you can watch it and see for yourself. But basically, just a summary. Because of the rampant inflation and the quote unquote tight labor market and low levels of unemployment, now all of a sudden the only thing that matters is the inflation. But it's not going to be a problem. We're just going to we're going to go from 1 in our scale of 1 to 10 to 2 now. So we were tapering $15 billion per month of the $150 billion per month in purchases that we've been doing for the last almost 2 years. So now, instead of purchasing, we basically have tapered off $15 billion in November and $15 billion in December. So now we're tapering. So we're buying $90 billion, and now they're going to double that. So just as discussed, exactly as we were talking about ahead of time and have been expecting, now they're going to go to $20 billion less in treasury bonds and $10 billion less in mortgage-backed securities. So if we are at 90 right now, in January they will go down to $60 billion per month. February it will be down to $30 billion per month, and then March would be down to, theoretically, assuming the taper plays out, they will no longer be manipulating the markets through treasury and mortgage-backed security purposes. So that will be the first of our 3 major steps completed. That is step 1, obviously, which we were, think about step 1 as us basically just standing on the gas pedal, trying to push it through the floor as hard as we can, hitting the nitrous button. So now we're going to take our foot off the gas. We're going to coast. They did not discuss the reduction of the balance sheet. They don't want to. They have a ridiculously large balance sheet, the largest balance sheet of all time. It's around like 9 trillion at this point in time. So they're not going to talk about reduction of the balance sheet. It was basically not even mentioned at all. But they did mention that there would be potentially rate hikes in the future at some point in time. So as we know, these are 3 things that all work in the same direction. So if we're not buying, from the market, manipulating it, the next step is to sell into the market, or reduction of the balance sheet. So that's 2 headwinds for the market. And then the third would be raising of rates, because that's essentially like compression of the valuations. So we have basically like the 3 headwinds. They have their projection for rate hikes, somewhere between 2 and 3 rate hikes in 2022. So, obviously we don't know how that's going to play out. We don't know what's going to happen in the meantime. He specifically mentioned how, there's still a bunch of issues with labor participation rate, which sure, there's definitely issues with labor participation rate. I never hear them address two of the key problems. One, when they look at the labor participation, they're looking at W-2 employees. So anybody that is doing a side hustle, anyone that is sourcing like alternative income other than just being, just a regular laborer in the market is not getting counting. Also, they don't take into account people that were working 2 or 3 jobs previously that are now only working 1, because of stimulus, because of government aid. He did mention how part of the problem with labor participation probably has something to do with the fact that, houses are at all-time highs, stock market is at all-time highs, crypto is at all-time highs. So, they at least acknowledge that the giant bubble that they've created, the everything bubble, might actually have something to do with some of the issues they're finding. But obviously they're also disconnected from reality. It does not surprise me that these are like afterthoughts that they've taken, a year and a half to figure out. So at this point in time, nothing has changed. Does not change my outlook on anything. This was exactly as we expected. Just more lies. Pinocchio Powell just standing up there lying, telling us, well, we wanted inflation. We have been wanting inflation. We finally got our inflation, but this is not the inflation we wanted. This inflation isn't what we wanted, because you guys think this inflation is bad, and inflation's actually good. So he just gets up there, lies, says that somehow this is a different kind of inflation than what they wanted. This isn't the same inflation that they were hoping for. This isn't the inflation that you were looking for. Just look the other way and things will go back to normal. He mentions how it's good that people's wages are going up. Does not mention how it's a net negative because prices are going up faster than wages. And now they're doing exactly what I said. They are tightening, or tapering into a slowdown in the economy. So if you look at, they threw up a couple of projections in addition to basically like their rate hike projections, as well as their like GDP projections and whatnot. And they're predicting like 5 or 6% growth over the next year, 4%. If you look at their unemployment chart, the unemployment they're predicting to continue to come down, and then lo and behold, all of a sudden over the next like 3 years, it's going to start going back up. That's weird. So we're getting unemployment down really low by manipulating the markets, but it's going to go back up because things are going to be so good. Yeah, that makes sense. So, you have to look past what they're actually saying and the lies that Pinocchio Powell is telling. He had a opportunity to basically, grow a set to show that he actually had some, balls and that he's an actual real man. But the truth is, he is a little cuck puppet. So. But no surprises. People are like, oh, he's going to turn into a huge hawk now that he got reelected. He's going to change. He's going to be the next Paul Volcker. He's not going to be any of those things. Powell is a total puss. He has nothing between his legs. The only thing that he has basically is a bunch of money and a bunch of strings that make him dance around and do and say whatever people in charge are telling him to do. And it's not Biden. Biden's not in charge. He's not doing what the Dems are telling him to do. He's doing what his handlers are telling him to do. So the powers that be are in full control. People are saying, oh, they can't raise rates. They can't do this. They can't do that. The truth is, no one knows what their motives are or what their agenda is. Even the things they tell us that their agenda is, we don't know what the time frame is on that. And they might do the opposite in the meantime. And, we're just talking about their end game. Maybe the short term is what we're seeing or they're talking about, and we don't know what the long game is, etc. So, it's important that we basically just stay dynamic in these markets, continue to just keep our eyes on exactly what they're doing, what they're saying, and what the markets are going to do. I did mention one really specific thing that I thought was entertaining or informative. He basically says, essentially, the policy and what we actually do doesn't matter. the markets react based on what we say. So he full on is acknowledging that what they do is pointless. What they do doesn't affect anything. That what he says and the tone that he says it in and the way the market anticipates it is what moves things. So he's full on acknowledging at this point in time that he doesn't even give a shit about the economy and the real world. All he really cares about is the markets. All they care about is the markets, which is no surprise, obviously. So, but anyway, nothing has changed. Everything played out exactly as expected. Powell got up there and just lied. So, yep, there we have it. Right back to where, where we expected. So, bought themselves another month of lies. So what is this going to mean now? What is actually going to happen? So Powell just did the one thing that we always say on this channel that an analyst, a technical analyst, whatever, should never do. He is calling the top. He literally is calling the top on inflation. He's saying this is it. It's going to go down after this. Everything's going to be fine. We're going to taper. We don't need to step in and do any emergency policies to correct the emergency policies that we've been doing for so long. We're going to double the taper. So we're going to buy less, buy twice as much. So we're going to keep buying a ton after already buying a ton, but we're just going to buy like slightly less than we were previously. We're going to buy twice as much less as we did last month. So what does that mean? It means that this thing is going to keep raging. We have not fixed the supply chain issues. We have not fixed the labor shortage. We have not fixed, the government policies that have created many of these labor shortages. We're going to see people continue to get laid off based on horrible policies from their states and federal government because they don't want to, basically get jabbed. People are going to be losing their jobs, quitting their jobs, leaving the cities. It's going to hurt GDP. We are literally producing almost nothing. We're seeing like this big burst, and they're saying, well, we're seeing a burst and the economy's great. Everything's fine. People are out spending money like crazy. No, wrong. We have lower retail numbers. We have lower online sales numbers. We have lower international sales numbers from companies like Amazon, and all around lower numbers. This is like the first Black Friday and Christmas season that we have saw lower sales numbers, literally like as far as they look back. These things always get bigger every year, and we count on these massive amounts of like retail spending on goods, and goods purchases are way down. Part of that is what we've been talking about, how people were afraid of inflation, ran out and bought tons of goods, and now they're back to like semi-normal situations. So now they're spending money on services because they were unable to spend money on services for so long. But the truth is, this whole situation is about to blow up. We're going to see slowing coming into the end of the year, into January, February, slowest time like seasonally of the year. And then on top of that, we're going to be tapering into it. Theoretically down to nothing, and then potentially going to be raising rates. We're basically going to see a culmination of a bunch of horrible Federal Reserve, federal government, and state policies, all kind of like meeting up at the same time. So expect massive amounts of volatility. The more speculative something is, the more volatile it's going to be. We are going to see ridiculous swings up and down in all different types of things. The more that these central planners try to influence things and change things and control things, the less effective they will be. And we notice that when they make a mistake, they don't pull back the mistake and say, oops, we shouldn't have done that. They make a policy, it does something terrible that they couldn't have expected, and then they make a new policy to try to correct that. So now they have one bad policy on top of another bad policy on top of hundreds of years of bad policies. And I expect that to fully continue. So that all being said, let's look at how the markets reacted. Obviously had a nice little burst up in crypto, as expected, as discussed on the previous streams. We had some phenomenal moves in, what did we take? Positions in Avalanche, Solana, and Matic. All did phenomenally well, between like 20 and 30% over the last couple of days, to everyone in the trade group and everyone watching the channel. Congratulations on those gains. Make sure that we lock those in. But remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So let's go ahead and let's take a look at crypto first, and then we'll kind of jump around here a little bit. We'll kind of mix it up a little. So just looking at the Bitcoin futures chart here first. So essentially, we did exactly what we said in the last couple of days. We're basically just oscillating between the 200 exponential on the bottom here and the 200 simple on the top right here. We expect the 200 exponential to act as support. We expect the 200 simple to act as resistance. Assuming we were to break through this area and, basically like take out like 49,500 and move to the upside, the next thing we'd be paying attention to is the daily 21 moving average in pink or purple, whatever on your screen here at like 52,665. We also have sort of like a little bit of a gap kind of left behind on the futures chart here. We came up and kind of filled it with this wick, but we left a decent gap there. So it's not unrealistic to think that we would come up here as high as like 53, maybe like 250 and try to fill that. Does it have to happen? No, we're pretty low on the indicator oscillators here. We're basically down inside of the bearish control zone. We're well below the zero line, red slope on the TJD, TDMACD. We're at support at the 200 exponential right here. We've been consolidating in this area. And, if we just kind of scroll back here and look at basically what's taking place now, on this futures chart, this is the bear market from 2017, 2018. So we see a bunch of green through here. As obviously the bears are in control. So, it's neutral when there's no highlight color in the background. The bulls are in control when it's red. The bears are in control when it's green. So then here, the bulls kind of take over as we bottom out. And we see this little section right here, where we basically have a bunch of red. And then we start to see like little bits of green right through here, as we get into like the pullback and then the Rona dump. And then from that point on, with the exception of that Rona dump right here, we basically see one little sliver of green right here in like September with that head and shoulders pullback, the reversion to the mean, the retest of the 200 exponential. We see one little sliver right here, with the initial pullback to the 200 exponential and simple. And now we see a ridiculous amount of green here lately. So to some people, they say, well, yeah, we're at the bottom of the range, so that's a buy. That's the best time to buy, is at the bottom of the range. And then we ride it up to new all-time highs. And Bitcoin goes to $1 gazillion. Well, sure, that's one way to look at it. I would rather buy when we're at the bottom of the range than at the top of the range and ride it back to the top. I would rather buy support and sell resistance. But this, to me, is a very clear change. This whole entire time, we were in a massive uptrend. We basically crossed above the 200 exponential and 200 simple and flipped the slopes over blue back here at like 10,000 in June of 2020. And we saw almost no green this entire time. This was obviously a buying opportunity off the triple bullish divergence. And then we had a nice little move after that. But now here we're seeing a ridiculous amount of green. This is telling us the bears are very, very clearly in control right here. So it's not like the bulls aren't trying. It's not like people aren't buying. It's not like Michael Saylor isn't in there buying, hundreds of millions of dollars worth of crypto. It's not like all these new companies aren't in here buying crypto, buying the pullback, buying the, 30% discount. It's not like all the influencers aren't saying, last chance to buy below 50,000, crypto to 100,000, to 1,000,000, to a gazillion, to the Citadel. It's not like that has changed. This just shows us the bears are winning. The bears are more powerful. The bulls were winning this whole entire time up here, and the bears stood no chance. They couldn't even barely get price action down into the bearish control zone, let alone take over for more than a couple days. Now the bears own the bulls. The bears are holding the bulls down, tearing them to pieces, having their way with them. And the bulls can do nothing about it. That's what this means. So we need to be real, real careful right here, getting overly ambitious. It's great to buy 200 exponential and simple. That's the best place to buy, is the reversion to the mean. It's the best place to sell when we're in a bear market and we retest it. That's one of my favorite trades. You buy support, you sell resistance. But what we need to pay attention to right now is what is happening right here for the first time. Let's turn off the actual price action for a second and use our brains and see what we see here. what's actually happening on this chart? We're seeing something we didn't see before. This 200 exponential flipped over red right here when we had that initial like pretty heavy sell-off. But the 200 exponential, reclaimed that area. The 200 simple was never even close to having a flat slope. And when we touched it here, we immediately bounced. When we touch it here, what would we expect? Well, we would expect an initial bounce at least. But here we see the 200 simple now has a flat slope. It's actually oscillating between like pink and blue. So we're at danger zone where this could literally break down and we could enter into a bear market any second. And the 200 exponential just flashed red here a couple of days ago as well. So without the price action in play, without our bias in play, we can see right now we are literally on the verge of the trend changing from bullish to bearish. And if you don't, we can kind of scroll back here. This is the initial bear market of 2017. No, I'm sorry. This is the Rona dump right here. We came down and flipped the slope on the 200 exponential and lost it, but the 200 simple stayed positive the whole time. And then this is literally right here is when I was warning everyone, the 200 simple is rolling over. It's rounding over right here. We're getting ready to have a massive capitulation, a dump. This is when I started the channel basically. Well, actually it was before that, but this is when I was literally warning everyone we were getting ready to capitulate. And obviously the 200 simple rolls over, flips the slope. The 200 exponential flips the slope. And then, obviously we put in a lower low and Bitcoin goes all the way down to like, 3,800, 3,900. Stock market got absolutely crushed. So this is the same thing we're potentially seeing happen right here. The 200 exponential loses its slope first. It regains the slope. The 200 simple slowly rolls back over. And then eventually both slopes roll over. Now, does this mean we have to go into a multi-year bear market? No, it does not mean that. What it means is that this is literally the most dangerous time we've seen. There's only been one other time when this happened, and that was the time on the futures chart. So we need to be very cautious right here. So sure, maybe I'm wrong. Maybe you're right and I'm wrong and I just don't understand crypto. But what I do understand is this indicator and these charts. And I've seen this happen a million times before on thousands of different assets, tens of thousands of different assets. And the majority of the time when this happens, we roll over and see a massive move to the downside. So let's keep in mind, Bitcoin is already down, we can turn back on the price action. Sure, we just made all-time highs recently, and that's great. That's definitely a good thing. It's always nice to make all-time highs, but we went nowhere afterwards. And, from peak to trough, Bitcoin is down 34%. From where we're at right now, it's down 30%. So it's down 30%, and it's telling us we're potentially getting ready to have like a capitulation move and probably put in a new low, which is obviously our ABC, correction pattern, which should be 5 waves to the downside. So could we get another move back up first? And then a bigger move to the downside, and then a move back up to retest the 200 exponential and simple, and then a bigger move to the downside? Sure. Do we have to take out the $30,000 low? No, we don't. A lot of things could happen, and I don't speak with certainties. What I do speak with, though, is, knowledge of what happened previously. And right now, what happened and what it looks like is playing out right now is not good. And that's on our futures chart. So now let's switch over to our Bitstamp chart. This one tells us a little bit different of a tale. The 200 exponential rolled over right here. The 200 simple flattened out this whole time. It's been flat. So because of the weekend price action, this flattened out way sooner than we saw in the futures chart. So again, what does that tell us? Well, you could say that the futures chart is more reliable. You could say that the spot chart is more reliable because the futures is manipulating it. You could say that they're each equally weighted. Whatever you want. But the fact of the matter is they're both agreeing right now. The 200 exponential has already rolled over on spot market, and we're barely above the 200 simple. These are basically just flipped on the futures chart and the spot market. But the fact of the matter is we're just oscillating between them, and they're both just flat right here. So what happens when the slope is flat? It could very easily, we could reclaim this area and continue going to the upside, just like we did back here when they were flat, and then we moved to a new all-time high and then saw a continuation. That is 100% a possibility. But it's also 100% a possibility that we see what happened, back through this area happened, where we put in a massive capitulation low, or where we see what happened when 2017 topped out and we went into basically like a multi-year, downtrend and lost 80-something% of the value. So both those are legitimate possibilities right now. New all-time highs, definitely a possibility. Consolidation for months and months and months, definitely a possibility. Capitulation and 85% down from all-time highs, definitely a possibility. So, again, I'm not trying to speak with certainty, and I'm not trying to just say it could go up, it could go sideways, or it could go down. What I'm saying is this is literally the most dangerous time to make assumptions or presumptions or, definitive statements about the market. Because if this thing goes up, I will gladly long it and go back in it and, accumulate, capitalize on the move of the market. I would love if this goes into an uptrend. It's much, much easier to make money in an uptrending market because something can go up hundreds and thousands of percentages, but it can only go down 99.9%. Shout out to Michael Saylor, MicroStrategy. It can only ever go down 100%, but it can go up 1,000%, 10,000%, 1,000,000%. Things can go up forever. So the risk reward is always better to the upside. But that's not what we're looking at right now. What we're looking at is the likelihood, the probability of that happening. Because at this point in time, do I want to take a 50-50 coin toss where I could make 1,000%, but I could lose 90%? I mean, when you look at it, risk reward, 1,000 versus, 100, let's say roughly, that's 10-to-1 risk reward. So that's great. Sure. If we don't take into account cost of capital, the amount of time that we would just be sitting with that money in there, the possibility that you might capitulate, when you see Bitcoin go down 90% and the FUD and all these cryptos blowing up and regulations coming in, et cetera, et cetera. So sure, I mean, if you want to just diamond hands 90% drop or whatever, that's completely up to you. That's not how I work. I don't play that game. I don't do that. So what we're paying attention to right now is what is the potential possibility and what is going to tell us that this is going back into a bull market? What is going to tell us this is going into a bear market? So right now, short term, the most important thing to pay attention to on this Bitcoin chart, short term, is this 821 daily. As long as this 821 daily, the red and the pink are across the downside, we know for sure that we can't go on an uptrend. Because in order for this to start back in an uptrend, those have to cross back to the upside. So in order for that to happen, we have to get above the 8 first, which is right where we're at, and then we have to get above the 21. So as an absolute fact, what needs to happen is we have to get above 51,500 before we can even potentially consider an 821 cross back to the upside. And if we do that, if that happens, the 200 simple will continue to the upside, the 200 exponential will flip back to the upside, and then we can potentially go back into a long-term uptrend. Maybe it's like this, we get a push up, then a push back down. Maybe it's like this, maybe it's parabolic and we go to 100,000 or 250,000. Those are all definitely things we can pay attention to once that happens. But the absolute thing that must happen before Bitcoin can go back into an uptrend is we have to get back above the 21 in order to cross the 821 back to the upside, in order to get the 200 exponential and simple to have a positive slope, in order to be in a bull market. Right now, we're in the neutral zone. We're in the stasis. The 200 exponential is telling us, we're below it. We're technically in a bear market. The 200 simple is a positive slope and we're above it. Technically, we're still in a bull market. So do we buy support right here or do we sell resistance right here? Well, that's exactly what we've been talking about. We're range bound. We literally were talking about how, basically like 50,750 was the top and, 46,000, whatever I said, 500 or whatever is the bottom. And we're just range bound between these two. So until one of these breaks clearly either to the upside above the 200 exponential or below the 200 simple based on daily candle closes, we don't know. I mean, we're just guessing. And the last time this happened, we consolidated here and then finally we broke to the upside and we took that long and we longed it. We longed the bottom right here off of bullish divergence. We'll talk about the 3 trades that we absolutely crushed it on in the group that I laid out on the channel last stream. We'll talk about those as well. The most important thing right now is to just lock in gains. If we were sure that the market was going to go up and we're entering back into a bull trend, I would 100% be entering positions and much less likely to take profits on them and just let them ride into like a long trending uptrend. But that's not what's happening right now. The same way that, when we shorted this recent Ethereum drop, we were quick to take profits because we want to lock in those gains because we're not convinced that Ethereum is just going to drop off the edge of a cliff. So right now we have a hard sell signal. We're in the neutral zone. We have a couple green histograms. We're range bound. So there's a bunch of things pointing us to the upside. There's a bunch of things pointing us to the downside. But we have very clear definable levels that if we break down below 46.6 or something like that, 46.7, we know it's going to start looking bearish, especially on daily candle closes and continuation. if we break above, somewhere around like 50,000 to 51.5, it's going to start looking good to the upside. And we're going to potentially go back into an uptrend. Could we still come up here and put in a lower high and then sell back off and go into a bear market? Sure. Could we break down from here, come back up, and then reclaim this area and then go into a bull market? Sure. That's totally fine. But right now, we're strictly paying attention to short-term, like scalps and locking in gains, because there is no trend. There's no definable trend right now. So that's what we're paying attention to. That's why it's so important to just not let our bias get over. People are like getting mad at me about what I'm saying about crypto right now, as if I like hate your crypto and I want you to lose money. It's the complete opposite. Matter of fact, most of the people that are mad or hear what I'm saying or disagree with me or, dislike or whatever it is, most of those people are frozen in the markets, not even doing anything. So who cares? If you're not even trading, if you're just hodling, who cares if it's going to go up or go down? You already made up your mind. You're convinced it's going up, or you wouldn't just be hodling. What I'm paying attention to is technicals. We're very clearly on the weekly below the 8 and 21. If we do not reclaim 52,000 right here, the 8 and 21 are getting ready to cross to the downside. And again, last time that happened was, this little ordeal right here, that 30,000 retest. Before that, when was it? This is the bear market of 2018. This is the bear market leading up to COVID. This is the CVD dump right here. So, this has happened 1, 2, 3, 4 times, in the last, since 2017, 4 times in the last 4 years. So do I want to be involved with it when it happens to the downside? No. What's most likely going to happen? Well, let's look at what happened last time. Let's assume it's going to be similar to this, because we had 821 cross, we reclaimed that level, and then 821 cross back down again. So we had the 821 cross bearishly, then we crossed it back to the upside, and now it looks like it's potentially going to cross back down to the downside again. So what happened? We had a reversion to the mean. We retested 200 exponential and simple. We were able to hold those levels, and then we saw a continuation to the upside. So if that happens again, if that happens right now, which is what it's sure looking like is likely to happen, let's look at those levels without our little crybaby bullshit talking about it will never happen. Crypto will never go to teens. You're dumb. Expanding cycles and lengthening cycles, and you don't understand. The 200 exponential moving average understands, and it's at 24,200. The 200 simple moving average understands, and it's at 18,700. And when we shot down here, we overshot them substantially. So maybe we don't do that. Maybe we come down here and touch them perfectly like we did in the bear market back here. Maybe we don't even get there at all. Maybe we front run them a little bit. Any of those things are possibilities. But there's a legitimate possibility right now that we are headed down somewhere in between, 18 and 24,000. And that's what we're paying attention to. And as a matter of fact, I've been talking about this for a while. When we had the bearish divergence right here on the weekly, I predicted this move perfectly. When we had the bullish divergence, triple divergence here, we predicted this move perfectly. We were able to capitalize on the way down. We were able to capitalize on the way up. And now we're able to get back out of the way on the way down here again. And now we're potentially looking at what's going to happen. And what does it look like is going to happen? Well, let's just look at our Fib levels. If we go back from the bear market of 2018 low all the way to the top right here, technically we should move this because we did slightly take out the all-time high. So it is slightly higher than it was previously. That's going to give us our ABC expanding flat Elliott wave correction, which then would take us down somewhere in between the 236, which our initial target would be 32,800, the 382, which is 20,500, or the 0.5, which is 13,959, potentially even as low as the 618, which is 9,582. So those are our initial targets, based on Fibonacci and what happens consistently over time. We also see bearish divergence on the weekly between this high and this high, bearish divergence on our indicator oscillators between this high and this high. We see the slope has flipped over red. We reclaimed it, but we're unable to maintain it. And now the slope is flipping over red again. As we're potentially, what happened last time? This slope flipped over red right here. The 821 crossed to the downside. This 821 looks like it's potentially crossing the downside. Slope has already flipped over red. We got the hard sell signal. We left the bullish control zone. We got the hard sell signal. We left the bullish control zone. I'm not saying this stuff to hurt people's feelings because I mean and I don't like crypto. The name of my channel that I put thousands and thousands of hours into is Crypto Trend Trader. I love crypto. I bought Ethereum at $85. I bought Bitcoin at $3,000 and $4,000. I was screaming from the rooftops for people to buy back here, and nobody listened, nobody cared. So do you think I'm just trying to hurt people's feelings up here and I don't like crypto and I'm mean? Or do you think that maybe I'm using actual technical analysis to determine what's potentially going to happen? And I mean, I know I'm speaking to the choir here. You guys are here because you know what I'm talking about. But if we can just influence one new person, if one person just hears this and goes, wait a minute, maybe this isn't just one of those gold bugs who hates crypto. Maybe this dude actually is doing technical analysis and doesn't monetize, his views or his Bybit links or whatever to try to make money off of the people watching this to sell, never-ending bullishness. I'm trying to protect my own gains, and I'm telling you what I'm doing. What you choose to do with that is up to you. I'm trying to help teach you how I'm consistently successful in these markets, and that's the most important thing. That's the most important thing. I mean, that's the only thing that matters is, I'm trying to teach you guys how to fish. I'm fine. I'm doing fine. I don't make any money off this YouTube channel. I don't need to make these videos for people. I'm trying to help people. And I mean, that's what it is. And end game, sure, maybe this will be, some side source of income, whatever, et cetera, et cetera. That's fine. But the fact of the matter is, I'm trying to teach other people what works for me and has worked for me and consistently works for me. And if you don't believe that it works for me, you can just watch my old videos and see how many times I'm right and see the trade setups that I put on here ahead of time. And then we can see how they play out. Everybody else says, you're wrong about this. And I'm like, sure, tell me what's going to happen. Leave it in the comments. Don't edit it. And then we'll come back later and look at it. And we'll see if you were right or not. But nobody ever wants to do that. So let's look at our Ethereum play. So obviously we bounced the bottom of the channel right here. Got a nice little reversion back to mean, back to heartline. Ethereum was looking, underperforming basically right here. Looks okay now. Looks decent. Really want to see it get above the heartline. If it does, it probably retests the top of the channel. 4,421. We'll see how that plays out. Overall, Ethereum still looks better. ETH to Bitcoin ratio. So we got the pullback down here. Bounced it pretty nicely. Reclaimed the 821. Looks like it's going to try to move back to the upside. But this is what we're really paying attention to. The sell by sell looks terrible right here. This is typically a topping formation. And I do expect further downside. I think this is basically, a dead cat bounce. Potential like little head and shoulders pattern developing right here on the Ethereum to Bitcoin ratio. We also have lost the blue slope line. It is still blue, but the histogram is below it. That tells me this is probably just a reflex reaction rally. A lot of crypto was oversold. People were afraid. People were speculating. People were locking in gains. People were afraid that Powell was going to talk about rate hikes, and tech and crypto are the same way. They're extremely speculative. Tech has ridiculous valuations based on not price to earnings, but price to sales because they're not even profitable. Crypto doesn't even have sales. They have like price to white paper. So it's like literally the most speculative thing you can get. So you would expect those two things to take the biggest hit if rates start to go up. If money gets expensive, speculation will go down substantially. And where is the most speculation at? Rampant speculation is in, tech stocks that are not profitable and cryptocurrencies that have no actual product. Now, again, I talk about crypto in a broad sense. I like Bitcoin. Bitcoin is for sure a proven store of value over time. But the price and the value is all subjective to what you paid for it. Because we don't know is the actual value of Bitcoin $10,000 or $100,000. We only know what the price of Bitcoin is. We'll see what the value is eventually. And you could say, but the network and this and that. No, sure, that's completely fine. That's completely fine. All we can do is look at actual technicals if we're going to make legitimate decisions. Ethereum is a platform that things are based on. Smart contracts, this, that, and the other. So again, this has a product that we can measure, we can see it functioning. There's arguments about it being centralized. There's arguments about this, that, and the other. What if Vitalik leaves? What if Ethereum 2.0 never comes out? Sure, that's all fine and good. We have basic attention token. They like do an actual thing. They have a browser. You can use Brave browser. They'll pay you. They will stop your YouTube ads. If you're not using Brave browser and you're watching YouTube and ads are popping up, please, by all means, get Brave browser and use it because it literally stops all the ads. And it pays you to just have like a background screen or whatever. I mean, I don't get anything from this. I'm just telling you, It's smart. It also doesn't sell your information, the same way that some of these other browsers do, some of these other, companies do. So again, very few. Binance Coin serves an actual purpose. You get a discount to trade on Binance if you hold a certain amount of Binance coins. It has like a functioning purpose. They burn it. It has decreasing value. But then you have all these other cryptos that are literally just selling a dream. They have a white paper and a dream. Some guy wrote up a white paper, a marketing statement, and makes it sound good. And then they make a nice little website, put a couple names behind it, create a token, buy some advertising, etc. And that's what 99% of crypto is. 99% of crypto is selling a dream. They don't have earnings. They don't have a product. They don't have anything. They just have a token, a speculative token, and a white paper. So that's why we got to be real, real careful with these things. It's not that I just don't believe that any cryptos will succeed in the future. I just see through all the bullshit, and most of it's vaporware. So let's look at the crypto weekly market cap right here and see what's going on. So we have bearish divergence once again between the top of the market cap right here and the top of the market cap right here. So we have obviously a high right here, and then we have a much lower high right here on our indicator oscillators, while we have a higher high on price action on the weekly. That's bearish divergence and typically results in a violent move to the downside, same way that bullish divergence does. And on a weekly time frame, it might take longer to play out, but when it does, it's violent. So again, if we see the reversion to the mean, which is the retest of a 200 exponential or 200 simple, we're talking about a crypto market cap of 900 billion or 670 billion. We're at 2.25 trillion right now. So that's crypto getting cut, by 50 to 75%. Some worse than others, obviously. So again, doesn't have to happen, but we got to be real careful, because what we're doing right now, we're closing consistently below the 21, and the 8 is on its way back down, chasing it. And again, last time it happened, we were able to recover it. We recouped that 821 cross. We moved back up. We put in a new all-time high on market cap. But we did it with divergence. That's not good. So we got to be real careful right here. And again, we can reclaim these areas. We can go to new all-time highs. These vaporware cryptos can develop actual products. Anything can happen. But let's pay attention to reality right now, because the most important thing is protecting our principal. It's easy to make money. It's hard to keep it. It's easy to make money. It's hard to keep it. That's the most important thing to remember. Bitcoin dominance chart right now, basically playing out exactly like we've been discussing. So what are we paying attention to right now? We have this low right here, then we have a lower low right here, and now what we're looking for, what I'm paying attention to, what I would like to see right here, if this chart's going to play out how I think it is we will put in another lower low. So we'll see some other like shit coins pop off to the upside, or we'll see a sell-off and Bitcoin sells off more, loses market cap compared to the other cryptos. Why do I want to see that? Because that's going to give us a beautiful signature on this chart, because it's going to give us a low right here, followed by a lower low, followed by a third lower low. And then here on the indicator oscillators, we will have a low right here, we will have a higher low right here, and a potential third higher low right here, which again would be triple bullish divergence. And then again on the TJD TDMACD, we have a low, then we have a couple red histograms come in, that's our low again. And then we have a couple red histograms come in and a potential another low again. So once again, potential for triple bullish divergence. And again, this on the weekly. So what would typically happen after we get triple bullish divergence print, we would see Bitcoin dominance spike to the upside, shoot to the upside aggressively. And we're seeing right now the slope line on the 200 simple is flattening out. It actually flipped up positive even though we're way below it. And the 200 exponential has started kind of accelerating to the downside when we had this little dump right here, but it's starting to level back out. So potentially we're talking about another reversion back to the mean, somewhere around like 56 to 60% Bitcoin dominance. So is that going to be the market top? Is Bitcoin going to go to 250,000 and the altcoins get left behind because XYZ? I don't know. But what we do know is this chart is telling us there's some serious big potential that Bitcoin is about to reclaim a ton of market cap from all these trash bag coins. So we'll see what happens. But it's definitely worth paying attention to. So next we have SHIB. SHIB basically came back down and retested that 382. Again, I didn't see a trade setup right here. I still don't see a trade setup right here. There's really nothing here for me. As far as I'm concerned on this one, the most important thing for us to pay attention to is, we obviously had this breakdown from the descending triangle. you know, depending how we draw this and how we're looking at this, you know, there's a lot of different ways we could pay attention to this, but, you know, this is basically what's happening right now. We're basically, with the exception of this failed breakout right here, we're basically just trading inside of a channel, inside of a descending channel in this range. Eventually, typically what will happen is we'll have a bearish pullback for a while, and then eventually we'll have a bullish break, but we'll put in a lower high. So the same way that this hit our basically like measure move of this channel when we broke out of it before, you know, this was basically our measure move. I think this was all on the chart at one point in time. Might have been on my other computer. I'm not sure. But yeah, I'm pretty sure we were talking about this forever. We basically broke out, we hit the measure move, and then that was it. We got rejected, we came back down, and now we're back inside that channel. So if this should happen again, we would expect once again the same thing to happen. Eventually, this is going to get tired of selling off. We're going to run out of sellers. Is it going to be right now? I don't know. Is it going to be, you know, once we're down at 0.00001 cents? I don't know. You know, but right now we know we're in a defined range, and when we break that range, we expect to get the measure move, which is the distance from the bottom of the channel to the top of the channel. So let's just say we just broke out of it today and we move to the upside. We would expect, you know, basically move to 0, 0, 0, wait, 4 zeros and then 4, 5. So again, though, still a very clear downtrend. A high, a lower high, a lower high, and then potentially another lower high. So, you know, is there a good trade right here? Maybe. I mean, if we break out of this, potentially take, you know, a continuation play on this for the measure move to the upside, you know, what would it be? What's the percentage going to be on that? You know, 31%. You know, it's obviously going to be a little bit of a gamble because you'll be buying into momentum on a, you know, unconfirmed breakout because it's probably just going to happen in like one candle or something. But there's definitely potential for a scalp there on the Fibonacci. You know, we're obviously inside the bearish control zone. Bears are very much in charge, but we're seeing a couple green histograms. We're seeing the tightening. We're seeing the stochastic rolling back over, potentially exiting the bearish control zone, potentially getting ready to cross and put in a hard buy. Last time that happened, you know, that was our basic like little explosion to the upside. So we're seeing that same signature show up again. So maybe we get rejected, come back down, put in a new low. Maybe we break out to the upside, you know, scalp 30%. We got to play it by ear, but there's definitely some potential there for a scalp on this in the near future. But let's keep in mind, overall, this is in a very clear downtrend. So if we take a play to the upside on this, we're taking a scalp and then getting back out as quickly as possible. Keep in mind, too, this is trading very technically. You know, from our top up here, basically, the breakdown of the descending triangle was the 236, our first key fib level. And now we're leveling out at the 382. So a breakout of the 382 of this channel will give us basically a retest of the previous fib level, which is going to take us back up to that 236. And then typically what's going to happen, well, you sell down to, you know, your fib level, you attempt to put back up lower high, sell down to the next fib level, try to push back up lower high, sell back down to the next fib level, try to push back up lower high, sell back down to the next fib level. So, you know, eventually do we go down here next? Eventually we probably go down to 2 cents, 2.3 cents. I mean, not 2 cents, 2 billionths of a cent, whatever this is, a bunch of zeros and then a 2.3. But before then, we probably go up to a bunch of zeros and then a 4.7. But again, you know, this shib, so nobody cares. I don't even know why I'm looking at this. I mean, it's been good for scalps. These doggy coins are good for little quick trades. So Solana, obviously, this was one of the specific trades we spoke about in one of the. My bad. I'll jump over to chat there and talk to you guys. I don't mean to ignore you. Let me ban this bot really quick. Okay, yeah, let's keep going here. So Solana, obviously, let's pay attention to this one. You know, very clearly in a downtrend, 821 have crossed to the downside. You know, we're selling back down, putting in new lows consistently. Let's look at what we talked about last time on this this Solana trade and why I took it. You know, we basically got the exact move we were talking about. We came back down to the 618. You know, after we broke down from the 0.5, came down to the 618, took a long right here, rode that back up to the heart line, and now we have the potential move to the top of the range, which is a 382. So we have, you know, essentially what works out to what, another like 20% move to the upside. I want to say, hang on one sec. Yeah, I guess Solana is slightly underperforming. Oh, you know what I should put on this chart that I don't? I know exactly what it is. I have this in the trade group chart, but I did not put it here on the stream chart, and I should have because we hadn't confirmed that low yet. If we just put on let's put on this orange fib right here, and we take from the top of the channel to the bottom of the channel, or the top of the move, the swing, to the bottom of the move right here, we now have this orange fib levels in play. And those orange fib levels are basically the bullish retracement of the bearish dump. So we assume this was a swing high. We can now assume this was a swing low. After we tag that 236 right here at that 168 level, we basically confirm that. And then we have this burst to the upside, which basically amounted to roughly like a 20% move from the trade setup I posted in the group. And I post those real time, which is nice too. Obviously I put this setup in play ahead of time, but you have real interactions with me real time to see what I'm doing. Because I actually had another resistance in play here as well, which was basically like this wedge that was forming. So we were basically forming, a pretty clear wedge. It's actually a little more clear on the 4 hour than on the daily, but we basically had like a ascending wedge or descending wedge right here. And then when we broke out right here of the wedge, we had essentially like the measure move back up to the heart line, the measure move back up to the retest of the 0.5 from the 618. We took out the 236, expect to move up to the 382, and then we got exactly up to the 382, which actually the 382 in the trade setup I posted in the group was our first target and a 20% move. And then the second target is the 0.5, which is actually up here. Less likely to get to it, obviously, but that would take us up to like 196, just under 200. Now, then we can take into account also that if we get up to 200, we'd potentially be breaking out of this channel as well. So it's not unrealistic to think that if we were to have that happen, that this could turn into an even better trade as we basically get something like this, which would be the measure move of the channel on the confirmed breakout, taking us now well above the 618, potentially back up to the 786, which would still be a lower low, and then a third lower low. So while we would still be in a downtrend, it's not unrealistic to think that what started off as, this little 20% trade that we've already been able to capture could easily turn into, a 45% trade. And we'll be taking profits along the way, obviously. But, that's some of the benefits of, seeing what these trade setups look like in real time and everything. And it's nice to see them play out also because these next three setups I mentioned to you guys all ahead of time, and then all three of them played out beautifully. Matter of fact, the Matic one, I think, blew this one out of the water. But again, that's already up 20%. And we had our capital in that trade for, a few hours, a couple days now. So next, let's talk about the Avalanche trade. So this one was looking kind of rough, but we were talking about the potential that this might be bottoming. And I specifically spoke about how this might be a legit trade setup. And now here we have the hard buy. We have multiple green histograms. We're back on top of the 8 and 21. And we already had what amounted to, off of the closes here, we've already had over a 33% move to the upside. And when we take into account the pattern that we were paying attention to once again, we see basically we have from the bottom back here in October to the top right here, fibbed that out. We came down exactly to the 618, and on the retest of the 618, when that held and we started closing basically at that same low again, we put this entry into play, 25% move back up to the top of the descending, wedge / channel deal going on here. 6% stop loss, 25% potential move to the upside, over 4-to-1 risk reward ratio. So we flip a coin 50-50. It's going to be heads or tails. If we're right, we get $4. If we're wrong, we lose $1. So we'll take that all day. I'll take that coin flip all day. As many times as you want to flip that coin with a heads and a tails on it, and I get $4 if I'm right, and you get $1 if you're wrong, or vice versa. I will stand there and do that with you all day long. That's the best possibility. Anything over a 2-to-1 risk reward ratio we're looking for. So now that we've reached the 382, which is basically two fib level bounce, we got above the 0.5. That was our first target. We got above the 382. That was our second target. We've now broken out of this range, potentially. Now, what could happen right here? This could sell back off, leave a wick behind, and then it looks like a rejection because this candle flips over red, and then it looks like a rejection outside the range. So this could easily reverse on us. So what I like to do is I like to move my stop loss back up initially to the entry once it moves in my favor. So there's no way this winner can turn into a loser. but then I'll move it up to like the 0.5 next. So then if this sells back off, I will lock in basically like that 12% gain right here. And then if it pulls back, I lock in 12% and I'm back out of the trade. If it continues up here, you know, and I want to stay in this trade, maybe I'll move it back, you know, slightly below like the 8 and 21. And, you know, I'll lock in 16% or 17%. But the fact of the matter is, there's still a possibility we come up to 236 at like 115. But there's also a very good possibility this is done. You know, this is a bearish pattern. We're selling off bearishly, and now we're getting a bullish move, a counter trend move back to the upside, attempting to reverse this trend. So we'll see what happens with it. You know, I'm cautiously ambitious with these, but overall, you know, still overall neutral on these markets. Let's skip XRP. Let's do the Matic one real quick, because that was the last of the trade setups that I spoke about specifically. So obviously we had our buy area here in blue. And again, this is the same trade we've taken countless times on Matic. You know, we basically took it back here at, it was like, I think the entry was like 70 cents. We rode it up here to like over 100% move. It was like $100.40 or something like that. We re-entered it back here and then rode it all the way back up here to like 216 or something like that. Then we took the same trade again right here for another 40-something% move. And again, this is, I've been displaying these on the channel ahead of time, you know, every time. So anybody could have taken these, you know, at their own discretion. So now here we have finally another one where basically the entry was at the bottom of the channel here. You know, and this could break at any point in time, stop us out, and we're done. 10% stop loss, 40% move back to the upside, basically just to retest the top of the range right here. And again, it's already moved, you know, what, 20% in our favor, something like that? Yeah, like over 18% in our favor. So again, free trade. You know, we could literally just put our stop loss right here. And if we take out the previous high, you know, we lock in 18% gains. And, you know, maybe we run to the upside, maybe we're out, but we locked in 18% in, you know, 2 candles. So again, I mean, you know, just consistency, measurable moves, playing the same things over and over again, basing it on actual technical analysis, not just rampant speculation. And you know what? You know what I'm seeing more and more of lately is emotions. Everybody's getting so emotional. And when people start getting emotional, that's when they lose. Or they're already losing, and that's why they're emotional. People are getting mad. They're turning into little crybaby bitches. They're getting upset at the things I say because I'm hurting their feelings. I'm sorry. I mean, but we're going to keep making gains while you keep, you know, wish in one hand and shit in the other and see which one fills up first. That's the old saying, and I absolutely love it. So that's Matic right there. Again, this thing could just roll over at any point in time and it's done. You know, and then maybe it starts looking like a big head and shoulders. We break down from this level. It comes back down to $1. You know, we'll have to play it by ear. Lots can happen here. But, you know, XRP still looks absolutely terrible. Bear market. It got no move off of the bottom right here. I mean, you could argue there's a trade set up here on XRP. You know, and you want a long right here. And you love XRP. So the reversion of the mean, 16%. The top of the range here again, 40%. Sure, but I mean, XRP looks like trash though. I would rather just trade one of the winners. I'm not going to, you know, bet on the horse with 3 legs to win the Kentucky Derby. I mean, you can if you think it's cute or you like its name or whatever. But it's not for me. Chainlink, again, looks very, very weak, very clearly in a bear market. You know, pathetic move here off like that $17 range. I mean, it's really not even that bad. It's like almost a 10% move right there. But compared to some of these other ones, looks bad. Hard sell signal coming in. Could this easily push back up to like 24.71? It definitely could. It definitely could. But I'm not seeing anything here on this one. You know, it's not a surprise that the 3 we displayed that looked the most promising all played out. And then a bunch of these other ones that you could take a stab at didn't do anything. You know, I didn't just get lucky. We didn't just pick the only 3 cryptos that moved to the upside. You know, we picked the best ones based on, you know, the way the chart looks. Not because, you know, I like Avalanche the best or Solana the best or I hate XRP or Brad Garlinghouse is a bitch. No, it's technicals. We're using technicals. Polkadot. Again, bounce to 0.5 almost perfectly here. We talked about this, the reversion to the mean, the retest at 200 exponential. It's trying to save the trend right now. Going to be very, very difficult for Polkadot to get above $30. That's still another like 7% to the upside, something like that. Bearish control zone, bunch of green histograms. It has potential. I mean, this thing could get up to like $30 to $32. But again, doesn't look great. Still just kind of oscillating inside that channel. So basic attention token. had a decent little move here off that dollar mark. That dollar is strong support. Been paying attention to that, obviously. It's going to stay strong support, right off of that blue support line that we've been paying attention to. Man, these trade setups are getting kind of annoying. But again, this, as far as I'm concerned, this one has pretty much played out. Is it possible that we bounce this dollar and we come all the way up here and complete this move to the 1.618, another 100% move to the upside? It is possible. Much less likely in my opinion, but possible. We are seeing stochastic looking like it wants to cross to the upside. We are seeing our first green histogram on the daily. Starting to look better. If this closes back above the 0.5 and like that $1.20 mark, maybe I'll take a small position in this for a scalp play back to the upside. But we'll have to keep our eye on that one because it's not quite developed yet. So Uniswap looks like it broke down from the descending triangle and now it's just retesting the bottom of the range. It looks terrible. It looks really bad. The 200 exponential and simple both rolling over aggressively. Can't get back above the 8. If this thing hits the measure move to the downside, I mean, we're talking like, we're talking like 9, 6, $3.50. I mean, we're talking low lows. Starting to show a little life, but does not look good. Cardano had like a 10-cent move. I mean, again, this one just looks terrible. Bearish control zone, couple green histograms, can't get above the 8. If it gets above the 8, maybe it pops up to 21, $1.42. But what is that? It's not even a 10% move. We could get the reversion to the mean play. If we start seeing some life out of this, maybe we get like a move back up to like $1.74. But we're still a ways off of it. Still a ways off of it. I mean, this is a perfect example of what a market looks like when it flips. This is a bull market right here. We lose the 200 exponential and simple right here. We go into a bear market and this thing loses, at the time it was worth 32 cents, and then by the time it crosses back to the upside, it was 5.5 cents. So massive loss right here, and that's assuming you got out at 5.5. Maybe it went from 30 something cents to 2 cents. Maybe it went from 30 something cents to, 1.9 pennies. But then again here, when this flips back over, when the trend starts going back up, we're back on top of 200 exponential and simple, when they flip back over blue, when we get this uptrend back in play at 4 cents right here, we're able to ride that all the way up here to $1.88. So from 4 cents to $1.88. That's why we don't have to worry about our emotions. We don't have to get hurt by these cryptos. We don't have to bet on Charles Hoskinson being a good person. We can just bet on the technicals. Because you know what? Technicals are always right. They're right 100% of the time, 90% of the time, or however that goes. I mean, they're not always right, but they got a way better chance of being right than you betting on a guy because you like the name Vitalik, or Charles has a cool statue in his office and he live streams. Yeah, Cardano looks like trash. Could it roll back over here? Could we see some potential moves to the upside? It could very easily just go down to $1. It could very easily go up to $1.75. But we're basically right smack in the middle right now. So I don't see anything on Cardano right now. MicroStrategy, basically just retesting the bottom of the triangle, retesting that resistance at $615. This thing just looks terrible. Hood hit our target at 1.618 to the downside. We got the hard buy signal. Still inside the bearish control zone. Still well a ways inside the bearish control zone. Seeing a little bit of green histograms. I mean, we made it to the teens. That's what we were talking about. So, what do I think about Robinhood right now? Yeah, I don't think so. It's a no-go for me right now. There's definitely a possibility this thing starts popping back to the upside, but it's a no-go. Coinbase. Again, just bouncing the bottom of the range to take profit. There's no, for me, there's no reason to immediately try to rush back into a trade after a trade setup plays out. I actually didn't short this. I just put this trade setup ahead of time for people because they want to see like shorts and stuff. I'm not interested really in shorting the markets right now just because they've been so bullish for so long. I'm not trying to pick the absolute top. I don't have to like try to scalp some shorts to the downside. you know, technically, are we trading with the trend? I mean, technically, this thing's in a downtrend. But overall, the markets are in just like a massive parabolic like melt up with like free and easy money that's been going on for years. So I'm just not really interested in like jumping in front of the way, try to pick up some nickels in front of like a freight train or a steamroller or whatever you want to say. Does Coinbase get a move back up here? Yeah, it probably does. I mean, it probably does. It probably gets a retest of like 275 to like 300. Hard buy signal coming out of bearish control zone. You know, could we get a push all the way back up here to new high? It's possible. You know, is there a trade setup in play for Coinbase? Maybe. I mean, I'm not interested in it right now, but there's definitely a possibility we get something like this plays out. Let's look at what the risk reward is. 6% risk if we take out the lows here based on like candle closes and break down from the bottom of the ascending broadening wedge. You know, 16% move to the upside. I mean, if it underperforms though and it only goes back to the 382, it's like 1-to-1. It's a coin toss. So as far as I'm concerned, this is a no-go for me. I mean, the first trade setup is literally just a coin toss. The second one, at least there's like some potential, and it probably does go to there. It probably does. But there's 100 other charts that probably have a better trade setup than this. We just got to go through and find them. We just got to put in the work. Bed Bath & Beyond, again, just coming down here to sweep the lows as expected. You know, still trash, still garbage, still a horrible company, still a meme stock. Newegg, same thing. Beautiful trade setup played out all the way back down here at the lows, potentially closing lower lows. You know, eventually we're going to lose this level, 1082, or maybe we come all the way back up to $20, one way or the other. I mean, at this point in time, you know, it's tempting to just take the same trade setup again. Like, do we just do this again? Hate when TradingView does that. Come on, TradingView. So, I mean, do we just take the same trade setup again? You know, close below our blue support down here. Stop loss of like 12, 13%. You know, with the target back to the upside of 44%. I mean, again, it's like a 3.5, 4-to-1 risk reward ratio. But I mean, this is definitely one of those ones that, you know, if the market starts to turn or continues to turn down, this thing's going to get wrecked. But again, I mean, 3.4-to-1 risk reward ratio. So maybe we'll take a small position on this. I mean, AMC, I mean, this played out exactly like we discussed. This was basically the retest of the 200 exponential and simple before continuation. You know, once we took out this previous low from back in August, I mean, when we took that out right here, it was like, sorry, game over. So now new low, pushing back up. I would expect, you know, $28 stacked as resistance. Eventually we'll get down here to the 382. So $18. Did it make it to the teenager? I knew we were talking about this being a teenager again. Not quite. It's on its way though. Yeah, I mean, it's trash. AMC is trash. Total trash. GME, again, I mean, total trash. But because the high right here, depending how you look at this, the wick from March 21st or the close from June 21st, depends what low we're using. Because if we're using the wick, this is our low that we really got to pay attention to if we take out. And that's at 119. But if we're using the close right here, this one is a higher close, then this is our low right here, and we've already taken that out. So we got to be real careful right here because this is basically like half the people are going to look at this and say, we took out the low, this is going much lower. Half the people are going to look at this and say, we still have a chance. I mean, realistically, though, this is the low you're paying attention to. I mean, you got to look at this low and think, I mean, this thing looks like it's about to roll over. It's not in a bear market yet, and it definitely looks like it has some potential for an upside move. But I mean, these meme stocks, it's if you got into the market because of meme stocks and you made some money because of meme stocks, that's great. But it's time to look at real assets, in my opinion, or at least cryptos, at least something. But like GameStop, AMC, come on, guys, come on. I mean, I'm sure I scared away anybody that likes them anyway. But I know like a couple of group members have made money on them. I've scalped a couple like little moves here and there. It's fine to trade stuff that you don't like or that you don't believe in, as long as you know that you're not a diamond hands hodler. You're fine. So DraftKings just putting in a new low. I mean, this thing looks terrible. I was tempted to take an entry right here. I was tempted to take an entry right here, and it blew through that. I was tempted to take an entry right here, it blew through that. So if this consolidates here long enough, we could potentially get an entry off of this and basically get like a trade setup, something like this. If we start to reclaim these levels. But it's going to be like a modest one in my opinion. Basically just trading between the blues, 2-to-1 risk reward ratio. I would much rather just wait for it to get down here and this is the one I would be looking for. That's the one we're really looking for. Does it get there? How long does it take to get there? Who knows? But eventually it probably does. This thing's just getting crushed. And they've got a little bit of like tricky stuff going on with their books too. You got to be careful also if you're not like really versed in these spaces. There's been like record number of mergers and acquisitions going on, and that's a really good way to like pad your books. Your earnings are through the roof because you bought another company, and now you have your earnings plus their earnings. Like there's a lot of, oh, look at your debt to asset ratio. Oh, look at the growth. Well, are you growing or are you buying like other companies? Got to be real careful with some of these tricky accounting methods or merger and acquisition methods. And if you're not familiar with something like that and you want to read like the Bible of investing, you want to learn like the real deal and get like the best foundation for like investing, I recommend Benjamin Graham, Intelligent Investor. And if you don't know who Benjamin Graham is, highly recommend you look into that. He's literally Warren Buffett's mentor, and wrote basically like the Bible of investing. 600 pages. It's definitely a read, but it's literally like the foundation that every investor slash long-term trader, whatever you want to call it, analyst, should be building like their whole game off of. So we'll take a quick break. I'm engaged with chat here for a second, and then we'll keep on rolling. So what's up, David Morel? Good to see you, my man. Appreciate you. Minsu Kim says, hey, how can I get access to the TJD Master? The TJD Master is exclusive to group members. So you can either join the group or, if you didn't want to be in the group, you could just do like a one-time purchase of it, I suppose. But I highly recommend anybody at least like join the group. I'm considering actually transitioning the way the group works. Have it as like, an initial, like basically a monthly fee. I've thought about doing a one-time payment, and then you get permanent access to the group and like the indicator. And if you're already a group member, you would just be like Grandfather Dan. I may transition to that with the new year. I'm not sure what the price point would be on it or whatever. But I obviously want to encourage more people in the group, but I also don't want a ton of people in the group because I'm not trying to moderate people like arguing, and I don't like a bunch of like spam junk or whatever. A lot of the people in the group are like pretty low key and like discreet. They prefer to like private message me, but it's a good way to support me. It's a good way to get the indicator, obviously. Everything else is free, but the group and the indicator. Breaks212 says, how do we get these indicators? Breaks, everything but the TJD Master is free. You can actually get all those other indicators, all my other indicators for free. So if you just go down to like the description of the video, list their full names, and you can go to TradingView and you can just favorite them and get them for free. The TJD Master is exclusive to group members. And it's just like one of the perks that I have for the group, and also for basically like a personal thank you to the people that support me. And the way you got to look at it is, man, like I do these videos for the group members, and then also for like other people, to find me or to learn or whatever. But all these videos are really for the group. So, they basically like pay the way for everybody else to get like some free content, essentially. It's also like marketing tool, obviously, to get new people, etc. But the TJD Master is literally like, obviously you see which indicators I use and everything. Stoch Slope is really good, but the the Jewel Thief is probably one of my favorites, one of my top 3, obviously. The TJD TDMACD And then obviously the TJD Master is my newest indicator, and it basically is my entire trade strategy for the basics of it, at least for like determining trend and like investing or trading, scalping. Works on every time frame. But I've explained it a million times what it is and how it works, and it's absolutely beautiful. You could literally explain it to a teenager, to a kid. Hey, when it turns this color, do this. When it turns this color, do that. And after an hour and a couple times messing with it, they could look at any chart and tell you, do you want to be long in this? Do you want to be short in this? Do you want to be neutral in this? And that's the beauty of it, to be able to look at hundreds of assets and determine, oh, is it time to exit this for now? Is it time to enter this for now? How do I get into these long-term trades? How do I enter into uranium when it's extremely undervalued and get out when it's extremely overvalued? How do I get into cryptocurrency at, Ethereum at $100 and get out at, 4,000? How do I get into Bitcoin at, 4,000 bucks and get out when we're at 60,000? Like, that's the easy stuff. Inside of it, the scalps, the trades, all that stuff, that's fun too, and it works great and everything. But the easiest thing to do, if you're trying to make money in markets, you're trying to get good investments, the key is you just buy them when they're cheap, you sell them when they're expensive. And the best way to do that is, based on moving averages, the price action in comparison to those moving averages, and the slope of those moving averages. Figure out how you can determine a bear market or a bull market, and then go by that. Wall Street has their own little BS. Oh, once something drops 20%, it's in a bear market. Well, not on crypto. Things drop 20% in a 15-minute period, and it doesn't even threaten the bear market at all. So the strategy I use, and the way I have the 8 and 21 crosses, and then the slope of the 200 exponential and 200 simple, works exponentially better, and allows me to capture like thousands of percent moves to the upside and avoid 90% moves to the downside, etc. So but you can reach me through email or whatever if you are interested in that. So I'm not sure if that's ALCH or ICH, but hello, what about DOT versus USD and versus Bitcoin? Does it button? Does it button? That's funny. Yeah, we looked at DOT. And then Minsu Kim says, how can I get into your trade group? Minsu, yeah, I mean, just shoot me a message. The contact information is on the YouTube page or whatever, but it's cryptotrendtrader@gmail.com. Just shoot me a message. I explain to you, basically just what it's all about. But yeah, let's keep on rolling, guys. Making some nice progress. Let me get a quick little sip, and then we'll rip into some more of these assets. But yeah, if you are interested, just shoot me a message. If you're interested in just the indicator, if you're interested in the combination of the indicator and the trade group, if you message me or inquire before the beginning of the year, regardless of what I do with like the pricing or the way the group or indicators are set up, I will honor the current system or whatever. But in all actuality, like it could go either way. I mean, I like the idea of people paying once to get in and then having like permanent access to the trade group. Just because I know how life is sometimes, and you can be busy for a month or a couple months, or just kind of sitting around not making a bunch of like trades, or you might be in there every single day making trades left and right. I know it's a crazy time and everything right now, so and sometimes when something's in like a massive bull market or whatever, and you work like a job full time or whatever, maybe you don't want to be like scalping left and right, but over the summer, maybe it's a different game for you. So but yeah, I kind of like the idea of people just having to pay once, getting the indicator, and then getting access to the group for forever, basically. And this really isn't about the money for me. I obviously do well trading. But like anything, you put a bunch of work and time into something, it's always nice to get supported. And that allows me to create new indicators and, more things that I'm able to share with the community. So let's get back into our traditional stuff and take a quick look at what's going on. So 10-year obviously popped up a little bit, still just range bound between the 200 exponential and 200 simple, hard buy signal. Nothing really has changed right here. What are we looking at? As we come up on the end of the week, we're just looking at this consolidation. If this 821 crosses the downside, it turns red. We're looking for it to like sweep the lows somewhere around like $1.22, potentially even go lower. But at this point in time, this just looks like a second rejection off the 200 exponential. And the more time we hit the 200 exponential, more likely we are to pop up to 200 simple. So this doesn't look bearish to me right now, but definitely looks like some short-term downside. And then as far as the monthly, obviously we still have half the month left, but we are on top of the 8 and 21. They have crossed green to the upside. We do have a bunch of green histograms. We are over top of the slope line. It is still red. We're above the 0 line. We're, bouncing off of the bullish control zone, but the monthly on this looks good. I mean, we're at resistance one time right here, one time right here, one time right here. So it makes sense that we're going to have trouble getting through this. And then also on the shorter time frames, we have the 200 exponential and simple. But I think it's just a matter of time before this thing explodes to the upside and we see like 2.7%. But, now we're looking at a monthly chart. So when does that happen? Well, I mean, it might not happen for 3 months, 6 months, a year, 2 years. It might be a move that it plays out over the next couple of years. But looks very, very likely. And, technically we are still in a bull market on the daily and the monthly, the daily, but the weekly we're trying to break through those key levels. So TLT, back above the 200 exponential and simple, basically just inverse, a little longer time frame. We're starting to see like the flattening of the yield curve. So I think paying attention to the 2 and the 10 is the most important, but it's also important to look at like the 20 or the 30. The VIX. So obviously we saw a pretty aggressive sell back off on the VIX, back to our neutral zone, which is 20. As long as we're at 20, basically the 200 exponential and simple moving average and the heart line of the channel, nothing changes for me. We're basically just we're at the neutral zone of this descending channel, and we're at the neutral zone of basically like the red top, green bottom channel. So we're literally just right smack in the middle of the range. So at this point in time, like, we're talking about a coin toss for anything. I do think this probably does pop higher though, but that's just my opinion. Oil barely hanging on to 200 exponential and simple. I am still very bullish on oil long term, or like mid to long term. It does probably get a pop back up here to like $77. But it is just kind of hanging out on the 200 exponential and simple. We still have this ascending broadening wedge. The bearish divergence has played out, on the daily in combination of the weekly. I think realistically we're going to see oil at $60 soon. The real question is, does it go to 60 first or does it go to 78 first? And that is where I honestly couldn't tell you. I think it probably goes to 78 first and then comes back down to 60 over the next few months. So Dow Jones had a nice little pop back to the upside. That was, people were afraid what Powell was going to say. And then Powell comes out and says, I have no balls. I'm a little bitch. I'm a puppet. So obviously Dow pops back up. What's going to happen now? I mean, we either come back up to new all-time highs and see continuation, or we see a rejection and come back down to the lows. It could go either way, honestly. We're inside the bullish control zone. That was a pretty powerful move back up off of support right here, off of like that 3,400 target. But, I mean, still just strong. Still strong. S&P, same thing, just massive candle to the upside. Got to be careful. We do still have bearish divergence on these longer time frames for all these major indexes. But again, you can recognize a bubble way before it pops. If you ever seen like somebody who blows one of those bubbles, it's like bigger than a person. You're like, oh, that's a bubble. That's a bubble. It's getting huge. There's no way it can get any bigger. And it just keeps getting bigger, keeps getting bigger, keeps getting bigger, floats through the air. You see it floating off into the distance, and then eventually it pops. So let's not get too excited on when this market's going to like implode on itself. And technically we had a bullish catalyst today because the market was expecting, Powell did exactly. So, or what we were expecting, Powell did exactly. So if anything, there was bearishness priced in because they were going to taper. People were afraid he was going to be more bearish, and he wasn't. Therefore, it's bullish. I mean, it sounds crazy, but that's how it works. IXIC, NASDAQ, bouncing support again, this green support line here, reclaiming the 821, very bullish candle. Again, I mean, it could go either way. I wouldn't be surprised if this went down tomorrow, but let's be real. Still in a very powerful uptrend. So, Russell had a nice little pop back up here off of the bottom of the channel once again. I mean, if this hasn't happened, like, literally how many times have we touched the bottom of this channel? Still range bound. We had the big throw over, the failed breakout, etc. This has officially entered into a bear market. The Russell is officially trash. I mean, it was trash for a while, but now it's official. So we have the 200 simple has rolled over pink. We have the 200 exponential has rolled over red. We're below them, and we're still range bound. Yeah, the Russell is just straight up trash. So what does that say about the economy? What does that say about stock market? I mean, and keep in mind, what is the Russell? The Russell is like a bunch of big publicly traded companies that didn't quite make it into, the S&P 500 or the Dow Jones. So it's like the next best companies. It's not the winners, but it's like other people who have won. So what does that tell us? Well, we know that the breadth of the market is terrible right now, and there's a couple stocks holding up the entire market, all these indexes. So the fact that the Russell looks like trash like this, is the Russell just giving us a secret? Is it telling us what's about to happen? It just hasn't happened yet? Probably. XLE, so we're holding that blue line support right here for now. It looked like it was going to break down from it, but did not. Depending what oil does, if oil pushes back up here, we'll probably hit the resistance in orange here. If oil gets that breakdown, we'll probably tag the 200 exponential or simple, potentially come down as high, as low as like 48. Again, though, still very bullish on XLE long term. Short to midterm could go either way. XLB Materials. How's this look? It looks like it's probably going to put in a lower high right here and roll over. It doesn't have to. Maybe it finds some support and continues up. It's trying to save this area. But we'll see. Could go either way. I don't particularly like that it kept the blue slope this whole time. It's getting the green. It probably comes up here, gets rejected, and rolls back over. It did get a retest of the breakout and a nice move off of it. But it is tough to get bullish on this at the moment. Financial XLF rolling over here. Looks very weak in comparison to most everything else. Trying to reclaim the 8 and 21, but just not quite doing it. Again, I mean, most of these markets look like a coin toss, honestly, at this point in time. They either have momentum going in their favor or they have, reclaiming an area. I mean, but I think today most of these big green candles that we're seeing were a reaction rally off of, bearishness being priced in. So the truth is was it just a reaction rally and we get more bearishness? Probably. Probably. XLY, consumer discretionary. Looks weak. 821 across the downside. Hard buy, which is good, but this thing looks like it wants to let go. I would expect this at like 185. It looks like it's about to get a big drop. And we have, obviously a high, a low, a lower high, a lower low. So this thing looks like it's going lower. XLP. So this is one of the ones we talked about. This is the safety play. Consumer staples. This is where everybody runs. This is the place to be right now, in my opinion. Index wise. This is the stuff people need. This is the stuff people are going to buy, regardless of, if we're in a recession or if we're in a booming stock market. This is going to do well. So, we got the breakout of the technical top right here. If this thing gets continuation, it's going to burst to the upside. Looks very good. Very good. And again, definite safety play. Healthcare is the next one. We talked about healthcare. Basically got the breakout of the triangle. We took out the first resistance in yellow. Now we took out the second resistance in yellow. Again, healthcare, that safety play. We have our measure move with our target up here at 142. Looks very likely. Looks very, very likely. And then what's our final one that we've been talking about? Utilities. So I'm actually going to move that one up and we'll look at that one next. Go figure. The utilities took out the high, bursting to the upside. So why are those doing well? Those are our safety plays. So XLK. Tech looks okay. Again, a lot of this probably just because there wasn't a rate hike. There maybe was one priced in and then there wasn't one announced. So now, tech burst to the upside. I don't know. I mean, definitely putting in what could be some potential bearish divergence. Got to be real careful with this. XLC communication looks terrible. Well below 200 exponential. 200 simple looks like it's about to roll over. Does it get that pushback up to like $80? Maybe. Looks like it wants to. Building a blue slope line here. A bunch of green histograms. Hard buy. It probably does go to 80. But after that, it probably gets rejected and goes way lower. Does not look good. Definitely the worst of the sectors right now. XLRE real estate, technically new high. Looks pretty strong overall. Again, very rate sensitive. But got to be careful with this one. I mean, to me, like bonds and REITs and stuff are not particularly appealing to me, and real estate in general right now at these prices not particularly appealing to me. But when rates are low, this could go on for a while. So not terrible. Looks good. I mean, it's got momentum, all-time highs, etc. XTN transportation, again, rolling over right here. Looks pretty weak. Having some difficulty getting above that 90, like $250, $93 range. Barely hanging on to 200 exponential and simple, losing momentum. This looks like this is about to roll over. Once the 200 simple cross above the 200 exponential, we're losing strength on this trend. And like the fact that we got that bounce and then a pathetic, attempt to break back up. And now here it looks like we're coming back down to it. This thing looks like it's probably going to come down and tag the 200 exponential at like 86.25. And when it does, it probably pushes back up here again. And then we see this thing really let go. This looks like a waterfall getting ready to happen. Probably still got some time though before it goes. It's still got some time. Hail. So yeah, couldn't get above that orange resistance, couldn't get the measure move. Back down here, retesting support again, and now look at this, officially entered into a bear market. So 200 simple finally rolled over to the downside. We see the 200 exponential rolled over a couple times. We lost the slope. Now we have both at the same time. Officially in a bear market. This thing probably lets go. This is going to go real low when it goes too. When we break down below this previous trend low right here, when we lose that D point right there, it's going to look really bad. So if we lose 52.90, I mean, this thing just lets go, I bet. We could put a fib in from the bottom down here all the way to the top and see what kind of confidence we have. Yeah, so I mean, the initial target's probably going to be that 236 right there. But after that, I mean, we see decent amount of confidence around like the 382. So realistically, this thing's probably going to $40. Could take a little bit to get there. I mean, it's just now going into a bear trend, but not good. Pave. This is that infrastructure play. This was a request. Not taking into account any fundamentals or anything, just kind of looking at the chart on this. I mean, this looks pretty good. We're pretty clearly in a nice, strong uptrend. 200 simple is above the 200 exponential, so, it's no surprise that we're definitely losing some momentum on this. Still looks okay for now. I mean, I'd be looking at something along these lines, kind of depending if you want to use the wicks or the bodies. I mean, but realistically, what is this just telling us? It's telling us just watch the 200 exponential and simple. There's no reason to even draw anything on here. This is our area of support that we would expect. I mean, basically, looks like we're going to come back down here, revisit those levels, and then we can make up our mind. But, this thing is consistently just putting in new highs. Consolidate here, broke out to the upside. Looks like it's probably just going to do the same thing again. We could put a fib extension for this move and see what it's telling us. Yeah, see, I mean, we just tagged the 1.786. Typically, my target's a 1.618, which was like, obviously we stalled behind that for a while. Once we get above the 1.786, I mean, there's a way to the 2.618. It's probably not going to get there anytime soon, but if we take out the 1.786, start consolidating and moving up here, my target is probably $48, $49. We're still well off of getting overly bullish on this thing, but that's probably where it goes. If and when we consolidate above this 1.786, and it looks like we get continuation, that's a nice little target for in the future. Jets looks terrible. So breaking down, we now, obviously have very clearly bearish control zone. Trying to break out of it right here, but it looks like it's rolling back over. Bear market, 200 exponential and simple rolled over. Close that gap right here. This thing just looks like it's just a waterfall getting ready to just pour out. Bloody waterfall. $18 and the 0.5 looks very, very likely right here. So yeah, $18. It's also the measure move. UPS, consolidating in the middle of the range, reclaiming the 821. 200 simple is above the 200 exponential, but as far as I'm concerned, just range bound for now. There's nothing to be done right here. There's nothing to be done. I mean, I would be, it could easily move back up to 217. It could easily come back down to 190. And we're at 205 right now. So if anything, it's like a coin toss. Below the slope line, it is still blue, but I expect this really honestly to top out like in January or February. So it maybe has a nice little pop before year end, but it doesn't look good. FedEx looks even worse. Still never even completed that move. I mean, this thing has looked like trash forever though, but we didn't even get the reversion to the mean. 200 exponential and simple to the downside. Looks terrible. Very clearly in a bear market. Very clearly in a bear market. Okay, let's look at our commodities here. I had a couple of people asking about uranium and stuff. So gold, still nothing really going on here. Just waiting to see what happened with the dollar and rates. Looks like it wants to have a short term like pop higher here, but again, can't get above the 200 exponential and simple. Looks like it just wants to let go. Silver looked terrible last time I looked at it. Yeah, breaking down from key levels. Silver just looks horrible. Man, if this thing lets go, I mean, it's going to be in the teens. Wants to push back up here, but looks terrible. Man, the bots have just been out lately. It's wild. I mean, I guess it's no surprise, but they didn't used to come into the actual live streams nearly as much. It was mostly just comments. XAU, XAG, that's weird. It says was hidden by me and then unhidden by me, but I did not unhide them. These bots are hacking us. Oh, it's Sheila one did the same thing too. Oh, maybe when they leave, probably left the chat. That's probably why. Gold silver ratio. Again, we busted through the 200 exponential, and now here we are retesting the 200 simple. Consolidate here for a little bit, and then this 200 simple is going to flip back over blue. This is a weekly chart. Gold is about to go into a bull market in relation to silver. The gold silver ratio is about to go into a bull market. The last time this happened was back in 2012. You know, we were in a bear market from basically the sell-off in 2010 on the gold silver ratio as silver went parabolic, you know, and gold reached all-time highs. Here we crossed back above the 200 exponential and simple crossed back up here in like 2014, and then we saw, you know, new all-time highs, gold to silver ratio. So it looks like we're getting ready to make that same move again. So what does this tell us? I mean, central bank's going to like revalue gold. Gold's going to go to 5,000 or 10,000 or whatever. I mean, who knows? But the fact of the matter is this telling us that if we want to be investing in gold or silver and we have to pick one, I'm investing in gold. And this doesn't even take into account ridiculous silver premiums. So sorry, silverbacks. Remember too, guys, if you're just tuning in, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. Platinum taking out the lows, bear market, looks absolutely terrible, trash, garbage. Copper had a pretty big breakdown right here, but reclaimed this support level in red. Reclaimed the 200 exponential. I still think it gets to our target, like $24. This is CPER, the index. But yeah, I mean, this doesn't look great. I mean, it's flagging out, so technically this should be like neutral to bullish. But once we broke out of this ascending channel, copper has not looked good for a while, and it had a massive run. So lithium finally made it back down to support. 821 crossed the downside. Probably see some kind of pushback up here, but realistically, I think the key area that we're watching on lithium is like right around here, which is going to line up perfectly with the 200 exponential and simple. So I am paying attention to basically when we get the retest down here, and that's where I'm looking for a potential for like a re-entry. We'll have to see what everything looks like at the time, but very clearly, you know, it's getting a little oversold right here. Stoch's starting to roll back up, but it doesn't look particularly great. Sorry, our kids, my bad, bro. I mean, it's never a bad idea to buy silver. It just, the gold silver ratio tells us that if you're going to buy gold or you're going to buy silver right now, it's better to be buying gold, as we're more than likely going into a, you know, gold to silver ratio bull market. But I mean, yeah, I mean, it's never a bad idea to buy gold or silver. Just look at it as a premium on insurance, you know, that you get to keep every month even if your house doesn't burn down. That's how I look at it. Hydrogen. All right, so did exactly what we said. Came all the way back down here and swept the lows. Man, this thing is wild. I mean, the move's really not that. I mean, it is a pretty big move, though. How much was that off the top? 27%. I mean, it's big enough. It's not like, it's not crypto, but I mean, hydrogen play. I still like all these things, just not short term. Probably does bounce off those levels, though. There's probably going to be a tradable setup in there. We'll keep our eye on hydrogen. There's definitely a scalp, I'm sure, coming up in that thing. So lumber, I mean, this is back at the 236. Lumber just is crushing right now. Reclaim the 200 exponential and simple. Probably topping out, at least temporarily, around these levels. You know, and arguably, if we... Let's get technical on lumber. It's been a minute since I actually... Let's see where we're at, because I bet we're at a key fib level right here. So our yellow fibs are going to be from the top to the bottom right here. So we stalled out at the 382 the first time, retested the 236, shot up to the 0.5, blew through the 0.5, blew through the 618. So we're back at the green 236. So the real question is, do we get rejected right here, or do we creep up to 1316? Man, lumber is just on fire. This is all speculative, though. I don't even know. This is ridiculous. Lumber just crushing. So USAS. So these miners still look like junk. Are they bottoming here? Maybe. I mean, maybe 2022 is going to be the year of the miners and the pot stocks, but it's tough to stay bullish on any of these things. Or get bullish, I guess I should say. Not stay, because I would have had to have been bullish on them. So Tilray, new low, not good. I mean, looks terrible. I looked at the, I actually looked at the pot stocks again. Like their fundamentals. I believe Tilray was trading at like a 33% book discount, like price to book discount right now. And I think ACB was trading at like something around the same thing, 30 or 40% discount. I mean, so these things are well oversold, like undervalued, whatever you want to call them. You know, price to book obviously doesn't have to just play out tomorrow. But, you know, I mean, when a company could literally just take everything on its balance sheet and sell it and have like a few $1 billion or whatever and no debt left, probably is undervalued. Probably undervalued a little bit. But I mean, that does not mean that it can't just keep dumping here. We're running out of support, running out of legitimate areas. I mean, I think, man, Tilray was just under $10 and it seemed like a deal. Got the reversion to mean, bear market. These pot stocks look terrible. ACB putting in new lows. Again, I mean, taking out like key support levels. These things just look so bad. Man. I mean, when they're ready to go back into a bull market, we're going to be rich. But in the meantime, I'm not trying to get poor. I'm trying to pick the bottom. I'm not trying to Jerome Powell and try to pick the top or the bottom of any of these inflation numbers or pot stocks. CGC balance sheet did not look nearly as good, like asset to book ratio, etc. But overall, still pretty good. Been some like key acquisitions in some of these companies too. I mean, I really do believe in this space, but I mean, if this Adam and Eve plays out, Canopy Growth is going to get destroyed. I mean, this thing looks like it wants to go to $5. So, man. Wow. These things are just getting crushed. So uranium, I had a couple people asking me about uranium. Let's see. So we had that triple bearish divergence play out. We got the reversion to the mean, the 200 test. I mean, it had a nice little pop today. I think we got to wait and see what happens over the next couple of days. Probably get a better entry than this. not a bad idea to take a long off these levels, but also a little skeptical just because, you know, we saw such a nice move play out. I don't know why I'm just gonna delete this. This already played out, and it was not a 28% stop loss. Um, yeah, so we'll see what happens right here. This area looks like it's gonna act as resistance. So I'd rather see this chop around for a little bit, and then possibly move back up. Hard buy signal, showing some green histograms, bouncing at 200. This probably does go higher, at least short term. But I mean, I'm long term definitely good to have a position in uranium. Short term probably does go higher, but midterm, I think it could go sideways to down. UEC, same thing. Didn't have the triple bearish divergence in the same way, but hit that 200 exponential and simple perfectly. Had a nice little pop today. Is uranium a little bit ahead of its skis, though? It probably is. Like, so many people talking about uranium. You know, and I try not to be a constant, like, contrarian, but nobody talked about uranium for 30 years, and now everybody loves it. I think we still got way better time to, like, reposition in this, like, midterm before we see more big upside. URNM, same thing, triple bearish divergence, hit the measure move to the downside, hit the target. Again, I mean, if you want to speculate on something that's powerful in an uptrend, that I wouldn't be mad if I got stuck with the long-term position in it. If I didn't already have a position, I would say uranium's a buy here for me. Off the 200 exponential and simple in a very powerful uptrend, and probably going much, much higher over time. But I would be careful what I'm buying with uranium. I would definitely look into the ETFs a little bit more and buy somebody that actually produces uranium, not like, gotta be careful with some of the miners as opposed to like an actual uranium play, because a lot of times people buy junk that's in a space that does well and then it underperforms. Cameco, you know, definitely one of the bigger names, one of the better ones, but, you know, do you buy ETF? Do you just go for Cameco? Do you go for like the Sprott fund? Do you do a little bit of each? Probably all right either way. I mean, there's only really like what, a dozen uranium companies, so you can't go that wrong. But you don't want to pick the XRP of uranium, you know what I mean? Wink, wink. Caterpillar rolling over. I mean, this thing is like, it was like dabbling on a bear market here for a while, and now it's confirmed. You know, 200 simple has rolled over, 200 exponential has rolled over. We're below both of them. Losing the slope line right here. I mean, this thing looks terrible. It looks like it wants to roll over, and when it does, you know, we're talking about like $173 Caterpillar. Man, that's so wild. This thing's about to get crushed. Deer looks slightly better still. 200 simple starting to roll over, bouncing at 200 exponential, still kind of operating inside this like weird little like wedge descending triangle deal, but does not look good. Looks better than Caterpillar, but does not look good. Antero Midstream Corporation, almost confirming the bear market. 200 simples rolling over, 200 exponential already rolled over. We're seeing hard buy at the bottom of the range. Does this thing pop higher? It probably does get like one more little pop higher, but I mean, but is it going to drop to 850 first? Just not looking good right here. Cemex, trying to carve out a bottom. It's got that triple bullish divergence. 1, 2, 3 drives of bullish divergence. 1, 2, 3 drives of bullish divergence. 20% reversion to the mean play. It could underperform and just hit the 200 exponential. 12% move to the upside. But with a 6% stop loss, if we take out that low at 575 and a target of 681, with our second target being basically that green level and the 200 simple at 740, this is like basically a almost 4-to-1 risk reward ratio on a legit company. I like this play. We'll probably jump back in on this one. CLF. All right, so finally breaking down from those levels. This thing has been pretty resilient for some time now. Seeing that key support hold up at like 19, but now we're starting to roll over. This thing looks like it's getting ready to let go. Still got some time, I'm sure, but this probably is at 15 before long here. This has been pretty resilient, but ever since we like, I mean, we were talking about this way back when. I think we were talking about the breakdown right here. And then we actually put in that new high, but we're unable to reclaim the channel. And then at that point in time, it looked like a double top. So now if we break down from this double top right here, we probably do see this thing at like 15 bucks pretty soon. I mean, it could take a couple months, but you know, before long. So Ford just hanging on. I did take some profits in my Ford trade. I should have waited one more day because it popped higher like by another buck. But I mean, that's not a big deal. I think our entry on this was like $7. And this probably does still go higher. I do still have part of the position open. You know, it's showing some bearish divergence. It's had a hell of a run. You know, I had some couple things to offset some of my capital gains. So went ahead and took some profits in Ford. Overall, though, still bullish on Ford. GM as well. Still bullish on GM overall. Don't love it at these levels, but it's probably okay. 200 simple above the 200 exponential. I mean, man, Ford just looks so much better than GM does. Not even just the cars, but like the chart. Hasbro. All right, so it's finally reclaiming that $100 level. I've been talking about this level forever. I mean, this looks like it wants to go higher. Let's see what happens though. A little bearish divergence potentially developing right here. Going into Christmas. I mean, I think probably everything is priced in. We'll see. They got a couple things in the works here. Maybe this does pop up to like 105 bucks. I don't know. I mean, I'm really just looking for this thing to take out like 104 and consolidate. And then I'll probably get long on this. Yeah. Man, I can't believe this thing is still just getting crushed. It's not that bad. Oh, getting to be that time, ladies and gentlemen. So works almost down to our target. Still just hanging tight on this one. Bear market. Broke down from support. Just really looking for it to revisit the lows at like a buck. You know what I'm looking for on this? I'm looking for one big, just thick red candle to the downside. Like a capitulation move. So I can scalp this thing again. But there's, I mean, at this point in time, there's probably a juicy, thick scalp, like, potential already here. But do I want to jump in now or do I want to wait it out? Let's see. I mean, if we just see the reversion to a mean 200 exponential and simple retest, we're talking about a 50% move to the upside, but we're still like 24% off of that previous low. So, yeah, we're still too early. I mean, it's 2-to-1 risk-reward ratio, but, you know, I'm not stop loss 24%. No, thank you. Nah, man. And he still headed down to our target. 200 exponentials rolling over. Below 200 simple. I mean, we're pretty close now. I think I said like 275 is where I was looking to get this, or 250. I mean, it's almost down to our target. Again, there's so much potential upside on this. I know there was like, you know, a little merger deal that kind of got like pushed aside, delayed, whatever. We'll see what happens. I mean, I still don't think this is going to be like, you know, I was going to say the next Apple, but it's more like the next MicroStrategy, and not in a good way. Walmart looking strong right here. Dollar Tree price looking strong right here too, because that's what the I think at this point in time, people have just accepted that they can just only afford to shop at the Dollar Tree and Walmart. And I'm not hating on people. I know a lot of people are struggling these times or whatever, but, you know, like Pew Pew Powell and his, you know, trash bag lies and everything. Yeah, I mean, probably getting your Christmas presents from Walmart this year, so don't get too excited, ladies and gentlemen. Looks good though. Probably retest the high at 150. Carbon. So yeah, we hit the top of that channel like we were discussing. I know my boy took some profits on that. Congratulations, brother, for bringing this to my attention, one, and then two, for taking advantage of that play. Very well played. Sell by sell, exit the bullish control zone. Back down at the heart line. Still looks okay. Probably does revisit the bottom of the channel though. But again, I think that's probably a buy. I mean, look at this thing. Trading very technically. You know, I may even take a stab at this thing at the bottom of the channel if we get there. So, and then GRN, another carbon play. Very, very similar chart. Again, sell by sell, top of the range. You know, bearish divergence signal, a bunch of red histograms. You know, again, I will take, same thing. I will probably take a position on this. I definitely think there is a legit, I don't know a ton about these two tickers in particular, but there's definitely some serious potential for these like carbon credit / exchange traded notes, all this garbage. So in this wokeified carbon free world, just be careful. We don't want them to get rid of all the carbon since, you know, that's what we're made of. So maybe not a good idea. But yeah, that looks pretty good. 200 exponential and simple creeping up. Looking for like that 25.50 mark. So, yeah, let's wrap it up there, guys. We're right at about the 2-hour mark. Blew through just about everything. Didn't do our Stonkaroonie tickers. Man, should we just rip through these real quick? I mean, you guys are here. You're listening. Yeah, let's just rip through these. F it. We used to go 3 hours like it was nothing. Let's go, baby. DXY, come back up here, retest the top of the range. You know, obviously, if Powell was going to tighten, this was going to burst to the upside. If Powell was going to be a sackless little bitch, probably was going to sell off some. But still consolidating the top of the range. Still bullish on this long term. Probably does just go sideways a little bit. This still just looks like a bullish reset before continuation to the upside. So Tesla... so we did get that move under 1,000 as expected. Now we've got this basic double top pattern right here. Elon still got like another 10 billion to sell. I imagine it's gonna happen before the end of the year. So see you at 900 soon, maybe 781. Getting pretty juicy the downside, but I mean he still has to sell quite a bit, and I imagine he's gonna do it before year end. So I would not be surprised to see a big thick downward candle. Maybe he pumps it back up first. I don't know. Discovery, new lows, looks terrible. Bear market, yeah, horrible. Uber bouncing that green box, looking pretty juicy right here. Does it get this move to the upside? Definitely some potential. 5% stop loss, 25% moves to the upside. 5-to-1 risk reward ratio. Looks pretty good. Again, bear market though, counter trend trade. A lot of these are probably just going much lower over time. Pinterest, same thing, bottom of the range. Bear market. Looking for like some bullish divergence on some of these things, and it's just not happening. Snap had a pretty aggressive little sell-off right here. Got bought up fairly aggressively. Seeing some bullish divergence start to play out here. Does this thing bounce now? Maybe. Man. I mean, there's just the risk-reward ratio on this is not good. Because what are we looking at? We're looking at like a $60 move to the upside or like down to 30. Man, Snap just looking wrecked. I thought Kim Kardashian was going to get on here and start snapping some OnlyFans or something like that. Peloton still looks terrible. Absolute trash. Probably does bounce here eventually. I mean, this thing's just been consolidating, just melting down. Flipping the slope line back over blue. Coming out of the bearish control zone at a key support level. Man, do I have to take a position in Peloton? 15% stop loss. And that was if we already entered off the 618, which I did not. So in all reality, oh man. Am I going to take a position on Peloton? I mean, I don't hate Peloton just because it's like a trash bag company that sells like garbage ass exercise equipment for way too much money to like yuppie rich people who probably don't use it and have to pay like a subscription to use their own stuff. That's still like that's a 10-to-1 risk reward ratio. We gotta be stupid not to take a Peloton move right here, right? Yeah. Oh my gosh. All right, I'm putting Peloton on the list. Don't make me regret you, Peloton. No matter how much money we make off Peloton, I'm not buying one of their piece of trash exercise equipment. Even if you could get one, but you can't. Airbnb. Uh, Again, trying to bounce this level here. Technically in a bear market now. 200 exponential and simple, both red. Made it back above the 200 simple for now. But this thing doesn't look good. It probably does come down to 152. Maybe bounces here though. We'll see. I mean, there's nothing right here. It looks bad, but could have a short-term bounce. Zillow. So kind of front ran our target by a little bit here. Got the retest of 0.5. If it gets above 65, it probably goes to 86. Building up some momentum. It looks like it's topping out again though. It's probably going to roll back over. I'm going to be patient on this one. Wait till we get to 618. I really want to get this under $50. Maybe just because, like, could have entered it at like 53 or something like that. Yeah, but I'm gonna hold out for like 49. Call it 50. Wish looks terrible. New low again. I mean, this thing is just getting wrecked. It's trash. Another drive of bullish divergence confirmed. Man. I mean, does this just go all the way to 0? It does, right? 3.618. I mean, when this thing pops higher, it's going to freaking melt faces. But when does that happen? Probably never. Bumble. Looks like it's trying to move back to the upside. Is it carving out a bottom right here? It's trying to. Came back down to fill the gap. Probably does have some upside potential. Okay, so is this one of the ones where we're going to come back up here and close our gap? I mean, not a lot of these have not been playing out recently, or at least been taking a lot longer than I like. But this one probably does have a favorable trade setup. I mean, a close below like 31.37 and I'm out like trout. That's a new daily low. But with a 11% stop loss, 31% target to the upside at $46, we probably could get a better entry than that. But I do kind of like this little bullish candle. Really got to see this thing back above the 821, but that's like 3-to-1 risk reward ratio. There's definitely potential there for it. You could even run a tighter stop and not even wait for it to take out the low. Just re-enter if it starts looking juicy. Baba, Chinese, bear market, trash. Bounce to 618 perfectly. Got a gap here at 161. Man, that's a nice little move. Oh, man, I got to really start looking at these. I'm going to look at these Chinese stocks. Baidu and Baba starting to look decent. Well, I take it back. Baidu not looking that great. Baba looking really good. I would rather see Baidu come down to like 113. Baba was like coming down lower and lower. Not putting in any divergence, but at least trading very technically. Baidu is like cheeky little fucker. Damn it. My bad. Had a little misclick. Yeah, trading pretty technically, hanging on to 618, but I'd rather see this down 786 blue box area. So we'll see what happens with that one. TME still looks bad. New lows. Bullish divergence though. I mean, this is another one that's just overdue probably for popping up here. I think a lot of these things right around the end of the year we're going to see a big rally in. Some of these China's ones, even if they stay in a bear market and still look like trash, I think some of these are about to explode to the upside. BZ ended up with continuation, a violent sell-off. You can't really touch this thing right now. JD. All right, so the JD move is playing out. Obviously, we had our push here. We had the push back down. We had the breakdown. Half played out so far. So do we see the continuation? Probably does end up at like $63. And this thing is trading kind of like opposite of what everything else is doing. Neo breaking down from key levels. At support, closing at the lows, giant descending triangle now. So are we finally going to get the big move down? Yeah, Neo going to 26 soon. Then 15, 14, maybe 9. Maybe delisted. Careful. So EDU looking like it was going to do something and then just going sideways still. Still have a large position in EDU. Just waiting for the explosion that will never happen. It's like the firework that you light off and it's like, and you just expecting it to pop, but it's a dud. TSM, bouncing the 200 exponential and simple, not really doing anything. Center of the range, still range bound, been range bound, probably will be forever. AMD, nice little move back to the upside. Got to be careful of these semiconductors potentially topping out. Nvidia looking about the same. Reclaiming key levels here, but these things probably just roll back over. Definitely looking like an exit opportunity. Intel still looks like total trash. At resistance, $50. Headed back down here. New lows, $46 for Intel. SMH, same thing. Just doing the little dead cat bounce, in my opinion. ARKK, trash. New lows, bouncing. I mean, man, let's just hope 2022 is better for old Kathy. I mean, everything's good for Kathy. She's doing well. But if you invest in her. Oh, they did, who was it? Was it the Compound? Did a like breakdown of the ARK funds. And this is a point I was making a while back, but they did a really good job like demonstrating it. Because of the amount of inflows that came into ARK, like in the billions, after their performance in 2020, if you actually take all the people that bought into this thing before the big run up, and then like in dollars, and then you take all the people that bought in dollars in this range that are down, like literally there's more money that's upside down in ARK right now than there is in profit. It's like negative 20%. So even though the stock might not be like down that much, and people are like, but Kathy outperformed the market and she's a genius and she's amazing. Like literally more money has been lost in ARK than has been made in ARK funds. So I believe it was a Compound. So you could probably check that out yourself, but they did a really good job like explaining that. And that was my point is, and it happens in crypto. It happens in everything. Something starts doing well on the way up. People put a little money in or get into it a little later or whatever. And then it keeps going up, keeps going up, keeps going up. People put more and more and more money in it. And then it tops out and people keep buying the dip, buying the dip, buying the dip. And then before long, it's up like 300% from where it was when the run started. But all the people in the fund, except for the first like 10% of the money that got into it, are all negative. And that's my point. You're late to the party and you put in more and more and more as it tops out and then goes down. And then everybody ends up a loser, except for Kathy. Kathy needs a good, you know what? A good pair of glasses, K-Ritz? R-Kits? Is that what? I think that's what you're talking about. Yeah, I don't know, man. She used to look good. I feel like this last 2 years have been rough on her. She's starting to really show her age. There's a couple people like that look like they've gotten like 10 years older in the last like year. And I'm not talking about like weight gain or like poor hygiene. I'm talking about some of these people just look like they had a rough year, including Kathy for sure. A couple of these gold and silver guys, man. Who is it? Who's the one who's always like, oh man, I can't think of his name. God, he's my favorite one to watch. He's like the biggest crybaby ever. Not Arcadian economics guy. Is it Miles Franklin? No, that's not right. Damn, I can't think of his name all of a sudden. He's my favorite one. He looks like he aged 20 years this year. It was like, whoa, bro, what happened to you? If you've seen like the Indiana Jones where they like drink from the goblet, and it's supposed to like, give you like eternal life or whatever. And like if you drink from the wrong goblet, it like sucks the life out of you and you turn into like the Crypt Keeper and die. He looks like that, but like right before the die part. Like he's like 75% of like all the life's been sucked out of him, but he's still alive for now. And again, I'm not wishing harm on this person, but like, that's what he looks like. It's clear. It's obvious. Teladoc looks terrible. Hit our target though, finally to the downside. This thing's gotten absolutely crushed. People were like swearing Teladoc was the future. That was 70% ago. You're down 70% Teladoc. If you needed a teledoctor back here, you definitely need one now. Your account needs a teledoctor. Oh my God. What a trash bag investment. They did another thing on Kathy too that I thought was funny. I believe it was the Compound. It's like Josh Brown and what's his name? Man, I can't remember. Good show though. Definitely recommend like their content's good stuff. But they did one about if ARK didn't if you took Tesla out of the ARK funds, her fund's down like 65%, but because of Tesla, it's only down 25%. So literally Tesla saved it. And the funniest thing is too, is had she not sold Apple to buy all these other like trash stocks at the bottom, she would like the ARK fund would actually be doing okay right now because Apple's like one of the few things putting in all-time highs. So very funny. Worst trader ever. Worst investor / trader ever. I have a 5-year time horizon, but I'm also a day trader. And that makes sense. Because I'm a woman, and if you don't like it, you're sexist. Palantir looks pretty bad. Almost made it to 618, not quite. Looks like it's trying to roll back over here. Hard buy coming out of the bearish control zone. No divergence or anything. Didn't put in a new low, so that's good, but probably does. We'll see. We'll see. About to wrap this up. Unity bouncing the 200 exponential pretty nicely. Broke down from that key channel. Probably has further downside. Bearish control zone, bunch of red histograms. Wants to move up here. Wants to move up here. It's probably going to come back up and try to retest this like 154 area. If it doesn't reclaim it though, it's probably going much lower. Corsair finally getting a little pop. And this one is race to zero and it up. Hard buy. I mean, I'm sure this thing just has continued to the downside. $18, $18.60. Every time these things like sell off massively, they like have a little pop. Everybody's like, this is it. They rush in and then it goes down another 10%. Fucking retail. PayPal got the breakdown off the Adam and Eve. Basically at the entry for this. I am barely still in a PayPal position for now. Might actually end up adding to it though. It's starting to look decent right now. Flipping the slope line over blue. Buy, sell, buy. It's spaced out a little more than I like. The bullish divergence signal here. But does look pretty juicy. This is a 20% move, 5% stop loss. So, I mean, like 4-to-1 risk reward ratio, a little more than that. Could get rejected at 204, but looks pretty good. Looks pretty juicy. Square broke down from key levels. Looks like it's going much lower. I mean, the measure move is so low on this. $100. Buy, sell, buy, and then it just broke down from that. Looks terrible. Square looks much worse. I'd much rather have PayPal than Square. Not just because of Jack Dorsey. But also, yeah. Twitter is useless trash. And also the stock, too. eBay in the danger zone, man. This thing looks like it's about to break down from here. Does not look good. Maybe it holds, though. We'll see. Looks like it wants to get a hard buy. A bunch of green histograms. This probably does rally into holiday, but very close to rolling back over. If we lose this yellow support at $65, it's going to look bad. We're also slightly below 200 exponential and simple, so definitely in the danger zone. Amazon, a nice little rally off the 200 exponential and simple, but honestly, I think it's just a matter of time before this at 3176, 3180. I think we're going to the bottom of the range, though, but it does look okay. Again, you would expect these things to rally into year end. Apple, nice little pushback up here. Does this look toppy? Yeah, a little bit. Volume's coming in pretty nice. You know, this thing probably doesn't top until we see like some big blow off top like candle. Either a big candle or big volume. A lot of this probably options driven. Apple is basically propping up the whole market right now. Apple, Microsoft, pretty much. Lightweight NVIDIA. Facebook / Meta. Yes, we're getting that pushback up here. Probably does come up here to 363. I would never buy it, but looks okay. Googly poogly. This thing looks like it's going to roll over. It probably is coming down. Nice little volume on that candle, though. I don't know. We'll see. If it takes out 2980, it probably does look okay for continuation to the upside. But I think more likely than not, it's coming down to 2608 or whatever, 2600. Microsoft, trying to reclaim the 821, hard buy. Got to be careful. I mean, some of these ones, just a little pullback on these, a couple percent would do like so much good, and market's just not letting it happen. I think that's one of the biggest problems we're having right now is like too much just dumb money trying to pile in on these things after a couple percent down, couple percent down. So eventually we're just going to get like that big rectal domination, and then they're all going to quit. So DocuSign trying to carve out a bottom right here. Looks like it's getting ready to leave the, we'll see. It's trying to carve out a bottom. If it breaks through this right here, this looks like a little W bottoming pattern. If it breaks through 155, it probably shoots up to 186. I mean, this really is like a 10% stop loss, 30% move to the upside. But I mean, realistically, you could probably just run a tight stop on this and just say, F it. I'm not worried about if it takes out the low. If it takes out 382, I'm out. 135.93 for the stop loss and 185 for the initial target. But gap fill all the way back to 228. I mean, but again, I would want to see it take out 155, but it probably does it in like after hours or pre-market. So you probably just have to like flip a coin and gamble on this one. But DocuSign is definitely a trash bag company, way overvalued. There's like a million other things that can do that just as good or better. But no, you don't understand. Sure, okay. But yeah, that's it for tonight, guys. Oh my gosh, with these damn bots. How is there so many bots? One more message from our kit says, are we really not gonna? There we go. Says, wear a bag on your face in case hers falls off. Bro, that's terrible. If her hair wasn't so like raggedy and old, like a hag or something like that, you could just turn around and smash from the back. But she's getting rough, dude. And I got a feeling Kathy looks okay with those like nerd glasses on, like talking all like smart about the future and like innovation and stuff. But I got a feeling, man, you unwrap that present, it's not gonna feel like Christmas, if you know what I mean. It's gonna feel more like Tales from the Crypt Keeper. Yeah, good to see you, David. Appreciate you being back, man. Each and every one of you, except for the bots. Bots, you can go F yourselves. But all you guys that participated in the chat, I appreciate you. All you guys that like, subscribe, all the good stuff. If you are interested in the group, the indicator, etc., whatever, just shoot me an email. I will get back to you within like a day or two. Everything's a little slow around the holidays, and I typically do everything around like the first of the month. Just for simplicity's sake. But if you do reach out to me before the new year, whatever changes take place, you will have the option for the old way or the new way, whatever suits you better or whatever the better deal is, even if I don't get back to you like immediately. But everybody take care of yourself, lock in those gains, take profits, do all that good stuff. Remember, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Merry Christmas to anybody in advance, or Happy Hanukkah, whatever you celebrate. Definitely spend some time with the family. Enjoy this holiday season. Take care of yourself. Get out there. Do a little exercise. Don't stare at the screens all day. Make sure you stay positive. Don't believe all this crazy crap going on. The world may seem bad at times, and it may seem like we're headed down some horrible path, and it's just going to be darkness and end of days from here. But the truth is, man, it's not as bad as everybody makes it out to be. I mean, it's definitely a tough time right now, but tough times make for strong men. So I'm confident in the community, in ourselves, in our trade strategies, and us as people, men, fathers, brothers, sons, whatever. So everybody just stay positive out there. Take care of yourself. Take care of your family. Be nice to strangers. Keep your cool, all that good stuff. Keep it cool in these markets, and get ready for a fucking stellar year, man. I'm pumped for 2022. Completely prepared to just dominate these markets. I'm looking forward to it. So, but that's going to wrap it up for today. Crypto Trend Trader with our Wednesday midweek market update. It is 10:24 p.m. Eastern Standard Time. That's it for tonight, guys. Appreciate each and every one of you. Make sure you share with your friends. Anybody else be interested in something like this? Keep your eye out for those snippet videos also. I do stream every Wednesday and Sunday, and then typically put out some like shorter, kind of like more tuned in videos during the week. But they are just snippets from the stream for the people that don't have time to watch the whole thing. So, but there you have it, guys. Crypto Trend Trader, and I'm out of here. Have a good night to you, brother. Good to see you, my man.